All right, all right, all right. Good morning, everybody. How is all the few ledges out there doing this morning? Let's get straight into Tesla. You're gonna have to give me a moment. We got some things to talk about right here, right now. Tesla's not even gonna be open for another 15 minutes, so it's not like you can do anything anyways. How is everybody today on this fantastic Thursday morning? Today is the 9th of February, 2023, and we are currently looking at a Bitcoin that is down on the session, almost a whole percent. That's confusing and both concerning, seeing how S&P 500 is up 0.7%, US 30 up, which is the Dow Jones Industrial, 0.5% up, and the US 100, the Nasdaq being up 1 spot to 1%. Why is Bitcoin down? We're going to talk about that today. There are a few pieces of news out there that, is the reason. All right, but first and foremost, let's talk about where we currently stand. If we go out here to the daily time frame, you're going to see that we are indeed pulling back to the final daily support down here in this consolidation that we've been seeing now since January. Well, let's go ahead and say since the 21st of January, as that's when the breakout brought us up into this monthly resistance, and we've been there ever since. We haven't really went anywhere. We had a whole lot of data last week, and we had initial jobless claims today that should be bearish ultimately for the dollar, which is another driving factor that should send Bitcoin up and not down. All right, so first thing is first. We are currently looking for buying opportunities on Bitcoin. The main reason is because most of these markets are now structured bullishly. I'm going to pull up some moving averages here. The relevant ones, anyways. The EMAs you can see here, nice bullish. You still have the 200 sitting above the 50 and the 100. We would typically like to see this moving average positioned under these two, but in time, as long as Bitcoin stays above 20K, that will ultimately happen. Now, on the EMA side here, you can see that you do not have the golden cross that everybody's talking about. The golden cross that you do have is on the simple moving averages, and they are different. I put more weight on the exponentials as they are quicker reacting, and that's just the way I do it. But you can see here you did have a golden cross on Monday, February the 6th. So why isn't this thing moving to the upside? We typically don't see price react off of these crosses anymore, not as much as you might have in the past, right? So, but it is nevertheless a bullish signal. Now, if you just go out to the weekly time frame, you're going to see that you got a death cross currently happening on the simple moving averages. So bears are reading this as a super bearish signal. So yeah, it's a higher time frame, and not only do you have that cross happening on the simples, if I pull them back off and just highlight the exponentials, you're going to see that boom, you're currently doing it with them as well. So if you're a bear, that's about the only thing you got looking in your corner as far as a bearish signal is concerned. And of course, monthly resistance coming in right there at 23,307. That is indeed what has stalled Bitcoin. We are currently 9 days into the month of February. February is a shortened month. I did make a post yesterday showing that historically February has been a decent month for Bitcoin. You can see out of all the Februaries that Bitcoin has had, which isn't many because let's be honest, it is a very new asset. You've only had 3 red ones. So the odds or the favor, if you will, would say that, there's a good chance that February will be good. Excuse me. All right, so let's see here. What we're currently watching is for buying opportunities. Yesterday, we were looking for buying opportunities as well. And if everything would have went according to plan, we should have seen yesterday take off to the upside, roughly right in this area here, around 23,088, or you could just call it the big figure of 23K. We should have seen Bitcoin find support there and then go to the upside. But what you've seen instead is a loss of correlation once again to risk. Because if I pull up risk, you're going to see that risk did indeed find support at that very same area. You can see this swing high here. This is a 2-hour chart, so it is an intraday time frame. But you can see how once you broke out above it here on that Fed speech or comedy series or whatever that was the other day, you can see we got quite a bit of volatility off of it. The markets seemed to like it, what he had to say. That area acted as support and you got a higher push and Bitcoin broke down. So why is that? Well, the main thing that I found, oh, you bastard. The main thing that I have read today, let me see here. The main thing that I read today that makes me think that it could be the culprit would be this article right here, where it's talking about Operation Choke Point, but they're calling it Operation Choke Point 2.0. And basically what it is the government not necessarily attacking the banks, but definitely making it a struggle for crypto companies to be able to bank. If crypto companies are not able to bank with U.S. regulated banks, it's going to make it very difficult for U.S. citizens to be investors in the space. So it looks like instead of just outright banning crypto, you just act like a gangster and put a little bit of pressure on your local businesses and, get them to do what you want them to do. And that's exactly what's going on. This is a very good article if you want to read. I'm not going to read the whole article because that's not what we do here. I am not a news service. But just to kind of keep it short, they're trying to squeeze the banks out of it. They want crypto gone, essentially. So as long as that is the case, that's going to keep Bitcoin investors and crypto investors as a whole on the spooky side, if you will. So I think that's why you're seeing a loss of correlation to risk. Yesterday, we were trying to get into a bullish position based on, that support that I had already discussed, and it did not work out. So here we are currently today. We got daily support coming in at $22,636. That's this bottom white line here. You can see that you did get a bounce from this area. You currently have intraday support, which is hourly support, coming in at 22,676. we did just have initial jobless claims at 8:30 a.m. with the forecast of 190K. What you actually got was 196. And why is that relevant? A higher than expected reading should be taken as negative / bearish for the USD, while a lower than expected reading should be taken as positive or bullish for the dollar. Now, we got into a little bit of a conversation yesterday where we had a Discord session and one of the members was kind of confused and basically said, if you would trade this way, looking to trade inverse to the dollar, I can't remember the exact date, but if you would have been like trying to short the dollar while Bitcoin was going up, you would have got killed, right? You would have gotten killed. Let's see here. Probably the bull market of 2017 is what he was saying. I don't know exactly where the date was that they were discussing, but we can get into that. Markets are cyclical, right? And they don't always do the same thing. Whereas in 2022, we clearly had a negative correlation or an inverse correlation with risk markets and the dollar. The dollar is the world reserve currency. And yes, there has been times where you had bullish risk markets. When I say risk markets for you new traders, new investors, I simply mean the S&P 500, the Dow Jones, and the Nasdaq. That's your risk market. All right. So when you have dollar correlation with when dollar's bullish, risk is bullish, that's typically when the economy's doing really, really good. And in the inverse direction, so like in a bear market, you would want to see the VIX climb, right? The VIX is the inverse correlation to the S&P 500. So and also you have currencies that are also used as risk off mechanisms, being the Japanese yen and the Swiss franc. Well, in 2022, we had a bear market based on inflation. It was the driving factor of the bear market. All right, inflation. Also with that inflation was a rising interest rate environment. So when we had the pandemic, the Fed dropped the interest rates all the way down to damn near negative, which is so very bullish for risk assets. That's why you had the bull of all bull markets in 2020, 21, up until November 2021. It's when the Fed decided to change the monetary policy from being ultra dovish and having interest rates setting at 0 to then hiking interest rates. That's when people started to started the asset rotation from risk to the dollar. We noticed this early on this channel and, with this community, that when that capital rotation began, we were looking for the VIX to also start its ascent. It didn't happen. We were also looking for the Japanese yen and the Swiss franc to start to climb, because in a risk-off scenario, or aka also known as a bear market, you want to see the VIX, the JPY, and the Swiss franc, all three going up. That's not what happened. What happened was everybody rotated or allocated those funds into the dollar. The dollar, and you could see that also over on the 20-year, the 30-year yields, stuff like that. That's where all the assets were allocated to. So just because usually, like I said, that is why currently we are trading as the DXY inverse to risk, because whatever allocation of capital that went into the dollar, basically the reason that it went into the dollar was also, if you're going to be raising interest rates, that's a plus. And then you got another plus simply because it's the world reserve currency. So it's normal and natural to be long the US dollar anyways, because it's the world reserve currency. But in a higher interest rate environment, that is also going to cause speculators to put their money there, as it is a way to generate a positive yield or positive alpha when you're in a bear market. So what we're looking for is for the funds to flow out of the dollar back into riskier assets. So hopefully that definition or that explanation helps you, right? And being one of the first ones to realize all of this is what also allowed us to take one of, if not the best short dollar positions, as well as getting ourselves positioned for Bitcoin longs at the bottom of the market cycle. Because let's be honest, finding the tops and the bottoms is basically what everybody's trying to do when they're looking to invest capital into capital markets. So, yeah, we were among the top in that, and we still are. So as you can see here, the US dollar is finding resistance, and it is finding resistance at the price at which we said to watch for the dollar to find resistance. And as long as you are under this price, you can look for bullish entries across the risk markets. And that price is 103.66. 103.66. And as you can see, you got there Monday, you stalled out Tuesday, Wednesday. Yesterday we had a pullback. This is the day where we were looking for bullish entries on Bitcoin. And then now today you see that expansion. So everything else is working as planned, as expected. So what we should be seeing today on Bitcoin is similar to what we are seeing here in risk, here in risk, here in risk. So basically what I was trying to do for my community yesterday is get us long down here, so that way we could be setting up here today and taking profits. However, that is not what happened. Here is today. So we were looking to buy the pullback, and then today we wanted to see a bullish expansion candle. And like I said, had everything worked out to perfection, that's exactly what you would be looking at today. Or not even perfection. Had it just worked out to the way it's supposed to have worked out. But we did have some negative drivers yesterday. I think the choke point 2.0 is one of the big ones. There is also Coinbase's CEO cites rumors the SEC may ban crypto staking. That's another big news thing. And then there was one more, crypto exchange Kraken faces SEC probe over unregistered securities. So those three news items are the reason why Bitcoin is not trading up today. You take those three news items off the table, yesterday's entry would have been successful. We would have got paid today and we would be sitting pretty, but that's not what occurred. So I just wanted to get that explanation out there. So that way people understand that we do know exactly what we're talking about, even though we talk slow and we have a very raspy voice. We know what we're doing. All right. So let's go with today, because every day brings new opportunities. As the markets have opportunities are endless in these financial markets. We trade Bitcoin, cryptocurrencies, alts, we trade Forex and stocks. So if you trade any of those assets, you are in the right place. So if you could please smash that like button, help the algorithm, get people to reach people so that way they can come over here and learn from an actual trader and start to actually help themselves become better at this, because ultimately that's all we are trying to do. With that number that we got, you can see that it was forecasted at 190. 196 is higher. That is bearish for the dollar. So we were looking for Bitcoin, bullish Bitcoin entries. I did take a long entry on Bitcoin, even though with all the FUD and the bad news out there, I'm actually trying to force my will upon the market. I'm doing exactly what I tell you guys not to do. I'm forcing my will upon the market because I think ultimately the market will decide that, yeah, it's not enough news to scare us out of this just yet. And we're going to see this thing move higher. And I took a bullish entry right here on this pullback. If we drop down into the 5-minute time frame, you're going to see that this is when I took my entry right there. Pretty damn tight entry, if I do say so myself, on the jobs number. So 8:30 is when the number came out. I got long instantly. 22,687 is my entry. My stop loss is just sitting down in here a little bit. Obviously, I'm better than 2-1, but this move has netted not much profits because it hasn't went anywhere really. You're down less than 1%. So if I zoom down here with the shift button and go up to the high that we currently have, you're going to see that it's not even 0.5% move. So even on like say 25x leverage, that's not going to generate much profits. Right now, the account is up 10%. So, I mean, 10% is good, but by the time the crypto exchanges take their fees and whatnot, it's not going to be that great. But nevertheless, it takes yesterday's loss off the board. All right. So that's good. Okay, so moving on, basically we're going to continue to watch these prices down here. I would rather you watch 22,676, as that is the lower hourly support. As long as you're not closing hourly candles under this line here, I think you're safe. I think price will drift higher. But with the reaction you're currently seeing and with what happened yesterday, I wouldn't be surprised to see it sell off either. Okay? Because of the fear right now. Fear makes people sell. It's when they are in good moods and when they're happy about stuff. That's when they want to buy everything. Tesla. And the market just opened, and with the market open, you do get a surge of volatility, as it is the last spike of volumes that you will receive on the daily range. So that will cause a bit of volatility. So if you do get long at hourly support, please just make sure that you are minding your downside risk. Your low of day currently for Bitcoin is all the way down here. So yesterday was a nasty day. Yesterday was a very nasty day. What we were looking at yesterday was this structure here. Each of these boxes is a daily candle in a sense. You can see how basically here you set a lower low, then you set a higher low, and then a higher high, taking out this day's high there. And then yet before yesterday, we were looking at a higher low on the day and a higher high. But ultimately, that was completely annihilated. So now what looked like a potential turn in the market with this inverse head and shoulders, that's what that is. You can see how it was absolutely sold off. So those sellers can remain, and people, they could be selling it today. So be very careful. Wait for the volatility to either clear itself out before you look for entries into this, or take your chances. It's your money. Use it when you want to. All right. Tesla. There's not much to do on Tesla, my friend. Okay? Tesla needs to pull back. Has to. You cannot buy up here. What's going to happen is you're going to end up taking a bullish entry, and then you're going to get a pullback. So you're going to end up buying the top. And that's not what you want to do. You want to get out of that mindset of doing what you used to do. You got to change that. Over in here is when you should have been a buyer on Tesla, right? Once you set that bottom, once you liquidated that bottom, and then once the market shown you that it had the ability to trade away from that bottom, that's when you should have been looking for entries, not up here, unless you're wanting to short it. And if you're wanting to short it, I'll tell you right now that you are not the only one. This orange line is your shorts volume. You can see there is a massive spike in short volume right now on Tesla. So people are shorting the hell out of this, and you could get a short squeeze, but it's not a massive short. It looks massive on the chart. But if you just simply come over here to a free website called finviz.com, tap in TSL or SLA, pull up Tesla, and look at the outstanding short interest or the short float, which is, how many shares are short. Your short float ratio is 3%, right? We don't typically see 3% short interest as a massive bullish driver. All right, let me just show you why. If you type in Bed Bath & Beyond, a company that everybody knows is in trouble and about to go to zero, if you come over here and look at their short float interest, you can see it's 45%. So 45% of the float of the outstanding shares for this company are being sold off short. So if this company was to get going to the upside, that would cause a short squeeze. So even though this looks like a short squeeze is about to occur, it's not really that big of a short float or outstanding shares that are short. The percentage isn't that great. 3%, that falls in line with normal shorts. So I wouldn't be concerned with that. Basically, what I would do is I would wait for the pullback. And until you get it, you got to sit on your hands. The only thing that I can tell you is there's a daily support at 166.50. You can wait on that. You can wait on the gap fillage in the village. There's a gap right here. Boom, boom. See this gap in price right there. Maybe Tesla comes back and fills the gap and then goes. You don't have to fill the gap, but we do know that gaps typically do get filled. So I leave it up to you. Once again, it's your money. You can do whatever you want with it. But I'm not a buyer at Tesla up here. I'm a buyer at Tesla down here. Let's look at the moving average structure just to see. Oh, damn it. I did it again and I don't remember what Wes said, how to fix that. So let me pull this up. So, I mean, you're starting to position yourself bullish, but you're not yet. In fact, this is still a very, very negative trend. You haven't really done much of a repair as far as with your moving averages and your technicals goes, but like you are off the bottom by 100%. So just buying the lows, you would have doubled your account, right? Just by buying the lows. It's impossible to know where the lows are going to be, especially if you have, I mean, sometimes technical levels do hold, and that's how we pick lows, but they don't always hold. For instance, yesterday, Bitcoin should have held at a technical level and moved up. It did not. So it doesn't always work. So you got to be careful looking to be a buyer on Tesla right now. Is there opportunity to still get into Tesla? Yes, but on a pullback. You got to wait on a pullback. If you look at this, you can see that you're almost overbought. On the RSI, this is a daily, guys. This is a daily time frame. On the RSI, you are well overbought. You don't want to buy overbought markets. You don't want to short them either, because that means there's a ton of bullish momentum in the stock. We don't use overbought to sell into, and we definitely don't want to be a buyer in an overbought market neither. What we want to do is we want to wait for the overbought conditions to chill out. We want to see the indicator cool off, pull back somewhere under or around the 60 area, and then find support at a technical level. Then you become a buyer. All right. But for right now, there's nothing to do on it. But we've been bullish for a while, so you probably should have caught that trade. Here we go on the Euro USD. You can see that you are moving up nicely away from the yearly opening range. As long as you're trading above 1.07046, this asset is bullish. It's bullish on the year, and it's bullish on the quarter. It is not, however, bullish on the month, but that's okay to see the first month or the first month in the quarter to have a pullback, even the second month in the quarter to have a pullback. But ultimately, for the quarter, we would love to see it finish strong. Going into Q2, we would love to see a big, strong candle. Or if it is going to be a down candle, not a big down candle, right? As we want to see the yearly trend start to work itself out early on into the year. And as of right now, the yearly trend looks good, right? Does that mean you can be a buyer where you currently are on the euro? Yeah, if you can find a technical level that holds a support, you can be a buyer on it. Jay Bradley was getting long this morning on the euro. Unfortunately, his trade didn't pan out, but had his stop been just a little bit wider, it would have. It would have. I did not see an opportunity to take a trade on the euro. I bought the euro yesterday or the day before yesterday when we pulled into this area, right? That's when I got long on the euro. Still holding that position. Naturally, I don't know if it's going to hold or not, but as of right now, it looks good. This is the exact thing that I want to see. This is typically what I like to see happen, right? When discussing these technical objective levels, is price to pull back into them, find demand, and then get away from them quickly, as that kind of helps with the bias. You got Aussie dollar up 1.1% on the day. This thing is absolutely flying. So all your risk markets are up and good, and Bitcoin is not. Bitcoin's still holding hourly support though, which is good. If it can continue to hold it, it's going to look more and more like a buying opportunity. You are at the bottom of the range, which that's a good check. And you are testing the 21 exponential, which is another good check in the buy box. Here is your overbought. You can see just how much this sideways price action has caused the indicator to pull back. This is also beautiful for buying opportunities. But ultimately, if we pull up the super smoother, you can still see that you're extremely overbought. This indicator doesn't do anything other than measure volatility, and since this is on a daily time frame, it's going to take a long time for it to expand. So what I typically do with this indicator is I like to look at it on the smaller time frames. You can see here, this is when you really broke out of it. If you go to the hourly, you can see it's a little bit more responsive to near-term price and price action. And yesterday, day before, I mean, you found yourself in an area to look to be a buyer, but this trend is changing. Unfortunately, it does look like it is trying to change. And, a deeper correction is okay, but how deep does it need to go? So if it doesn't hold here today and start moving up, Bitcoin is what I'm talking about. If it doesn't hold here today at daily support and start its ascent with the risk markets, then I would be looking for a liquidity run below this swing low. then potentially be a buyer there. If that doesn't hold, and what I mean by that is if Bitcoin does ultimately break down through this level and have bearish continuation, then you're going to have to wait until it finds support and makes support. And that could take weeks to happen. Weeks. Okay? Price action is slow. It generally moves very, very slow. I've seen setups take 4 to 5 days to play out. Good morning, everybody. How's everybody doing this morning? I love it. Thank you all for your time. Thank you so much for being here. And for the 37 of you that have already smashed the like button, thank you so much for that. What about the weekly death cross? What about it? This is basically how I look at it too. You got to understand there's an overall theme working here. The shorts were wrong. The shorts are wrong. We don't know that for a fact just yet. We're not out of the woods just yet, right? But for people that keep using sticky inflation as a narrative for potential '08 style crashes, they're wrong. They're going to be wrong. You would literally need a complete and utter failure, a blowout in the jobs and everything else to start coming crashing down before I would expect an '08 style bear market. No, what you have here on Bitcoin is not a dead cat bounce. It is an exhaustion of sellers. The other term that is mostly well known is capitulation. You had capitulation here. You had your exhaustion here. This is the beginning of your move up off of the lows. I believe your bear market low is in, but with that being said, I thought this was going to be the bear market low over here. And I was wrong about that. But there was no way of me to know that the second largest crypto exchange in the world was a Ponzi scheme. You know what I'm saying? So as long as the largest cryptocurrency company in the world isn't a Ponzi scheme, I think your lows on Bitcoin are in. Now, an all-out assault or a war on Bitcoin from the United States of America's government could also cause new lows in Bitcoin. And if that's the case, if that ends up happening, you guys are still going to be fine because we also focus on Forex and stocks. There are other assets to trade and generate incomes from. In fact, those are the assets where I do generate my income, not crypto. I am an investor in crypto and I am accumulating crypto, but I'm accumulating it by trading it, right? My downside risk is completely in control. I cannot lose money at this stage of the game. I can lose unrealized P&L, and now I have a lot of it, right? All the Bitcoin I hold in cold storage right now, all of it, it's all unrealized P&L. So I could lose all of that, and that would hurt. It would hurt very badly, but I'm not going to, I'm still going to be able to operate on a day-to-day basis. It's not going to wipe out my life savings or anything like that. And I suggest you position yourself the same way. Ultimately, it's the safest way to trade the most riskiest asset class in the world. Instead of sinking your life savings into Bitcoin and hoping we get another bull market cycle like we did in 2020 and then 21, which is totally possible, but the halving isn't until 2024. So you have plenty of time to position yourself bullish on the asset. Are you going to catch the lows? Probably not now. You could have, if you followed my Twitter account, you could have got 16,530. Although that's not the low. The low is what? 15,460. That's not bad. That's not bad. That's pretty close to the low, considering all things. This is my entry for any new person in the channel on Bitcoin. I currently hold 2 accounts long from that price. That is the yearly open. As long as you're above that, you are bullish on the year. And that's objective, not subjective. Anything else I can clear up for you? Yep. Potatoes, 730, got it. See, I'm not sure. I mean, the biggest majority of my audience is here in the U.S. with me. I do have people from all over the world, but for my metrics show me that like overwhelmingly the majority of my audience is the United States. So he got the meme. 877 cash now, baby. JG Wentworth. It's your money. Use it when you want to. Has to be the absolute best commercial song ever, simply based on the amount of business that generated. Because the song is so stupid, it gets stuck in your head and you'll be singing it all day long. Is that not ingenious or what? That's why commercials are so stupid. They try to get these little catchy tones and songs and stuff to make you think about the damn commercial all day. Yeah, good job. Taking a break from the drilling and filling. Love to hear your thoughts. Awesome. Good job, Zach. You deserve a vacation, my friend. Google, please. Yeah, let's go look at Goog. Let's see how far Goog's up off the lows. That's not Goog. Goog having that pullback right now. So there you go. We haven't had good earnings. So naturally that's got people confused or concerned a little bit. You did have a stock split on Google, so now it is cheap or cheaper than it used to be. So now the average American can buy a few shares of this thing. Yeah, it's having a nice pullback right now. There is still a gap to fill, so I wouldn't buy the first test of support, right? I wouldn't buy the first test of support, which you're doing right now. But I would let support form. And ultimately, as long as you're trading above 89 spot 83, you can look for bullish opportunities. If you get under 89.83, you no longer want to look for bullish opportunities because that means something has changed on Google. What has changed objectively? You are no longer bullish on the year, right? That means your yearly trend will have changed. Therefore, you would be looking to sell Google, not buy it. Sell it. Because your downtrend will have resumed. You will have resumption on the downtrend. Let's see, did Google ever even break out of its downtrend? I don't think it did. Yeah, it did. But, well, no, it didn't. Let's get you where you're supposed to be. Yeah, it did ever so briefly, broke out of its downtrend, but you're back under it. I wouldn't let that sweat me. In fact, this one's going on the watch list. We got to get rid of something, though. That's staying, that's staying. Let's get rid of you. Let's get rid of you. Let's get rid of you. All right, that's good enough. Let's put Goog on watch. All right, Goog's on watch. This is potentially turning into a buying opportunity. Let's check our metrics. You are currently breaking down. I don't know what kind of bad news you got going on for Google, or there could be bad news across the entire marketplace because these numbers are coming down. You see how they're coming down? So something could be going on here. If these numbers start to come down, you don't want to be a buyer as support on Bitcoin. All right? Because there could be a piece of news out there that just broke that I am not aware of. And news will absolutely change everything from day to day. But I would let that gap fill, which you will have at like 94.47. Your gap will be filled. And then if you close back up above right there, 96.73, retests back into that price, maybe Friday, Monday, or Tuesday, could be potential buying opportunities. I don't like this weekly, but it is a pullback. Very strong down move here. Typically, you don't want to see that on pullbacks. But it doesn't matter where it is right now. It matters where it closes. I don't want to see a closure back under the 200 exponential. Don't want to see that either. So we'll keep this one on watch, though, because it is turning into a potential opportunity. They did have a bad earnings. They missed on earnings. So this sell-off could just be from that. Just lagged. DXY pulling back into the 21 exponential. Someone said in my Twitter feed that this looks like a bull flag. Bull flags typically work out better in bullish markets. You are not in a bullish market on the dollar anymore. You are clearly in a downtrend. But at the same time, this is the price that matters. Above 103,663 will ultimately determine whether or not we're going to stop being short the dollar and start looking for buys on the dollar. We are not uber bears or uber bulls here. We are traders. We trade the market direction. We want to be on the right side of the market always. And we usually are on the right side of the market. We still are on the right side of the market from being short. I have seen no reason to close my short position just yet. My short position is up here on the dollar. Aussie, Aussie, Aussie. Yeah, there's nothing to do on Aussie. I don't care how many times you grout it out into the chat. Yeah, you're bullish. You don't want to sell this, right? It looks like a sell, smells like a sell, right? And if you're letting macroeconomics drive your bias, with inflation still above 6%, you're still a bear. This looks like the ultimate sell setup, doesn't it? And one could argue, as long as you're trading under 0.69962, you could at least look for a day trade short opportunity there and see what happens, right? I don't know what price is going to do, but order flow is clearly bullish on this. You clearly just took out a main swing high. Any pullback is going to be looked at as a buying opportunity. And on the year, you're bullish. On the quarter, you're bullish. You're not on the month, though. On the month, it looks like you've had your pullback, you found your monthly low, and now you're starting to trade away from it. You broke out above resistance on a closing basis last month. You retested the 618 retracement of the current yearly range. This is your current yearly range right there. Well, there. That's your current yearly range. You just retested the 618 of your current yearly range. This is not a sell trade. You are against the trend for looking for shorts. But if you want to short it, short it. You didn't liquidate anything at all. You did last week. You took out last week's high and then threw out a bearish engulfing candle. So yeah, I mean, it looks bearish on the near term, but on the year term, it's bullish. And markets are cyclical, right? People are looking for year-over-year gains. So year-over-year is how markets cycle from January to January, January to January. That's how you want to start looking at the marketplace. You don't want to look at the marketplace like you don't looking like at all of this and saying, "Oh, this is all still in a downtrend. It's all still bear market." This is all in the past. We have new data, we have new information, we have a whole lot of things that have changed, and the market doesn't care what happened over here. It's a new year. It's time to make money again, right? In fact, you're going to have to pay the taxes on the money you made last year pretty damn soon. So, guess what? The markets are yearly cyclical. And yearly, this is still in an uptrend. But clearly needs a pullback, and you've gotten the pullback. So wait for a pullback to daily support. The only two prices where I would be making any trading decisions on the Aussie dollar would be there or there. That is it. I would look for bullish opportunities at 0.69592 or 69240. And it wouldn't be today, as it is 10 o'clock in the morning. Your prime time entry has already taken place. Look at that daily range. It's absolutely stunning. It's a beautiful daily range. We got to put it on Oanda because Forex.com is stingy with their data. Look at this. This daily range is just flawlessly, beautifully bullish. And for the last 3 days, you have been bullish. I don't see any reason to change that. Not yet. If you get under the point of control, which you might, you know what I mean? If you see a spike in volume and then the close on the day ends up being off and then your point of control ends up being up here, then maybe you can look for selling opportunities, but that's going to be tomorrow. There's not a trade on Aussie today. Google has bad news about Bard, Google's new AI search integration. Gotcha. A factual error by Bard AI chatbot just cost Google over $100 billion. Damn. That sucks. Pound dollar, another asset that is strong, very strong today. Same scenario. We must go here. Yeah, point of control is structured to the point that this thing is bullish. They're clearly buying weekly support, or they clearly bought weekly support. It's as simple as that. Let's go make sure that is weekly support. It is. Now, whether or not that holds, it's two different things because you're coming into an area where sellers will likely look to re-engage the marketplace. Now, the pound is not. Let's see, did it get back above? Let's use this line here. All right, it did. So the pound, I would be watching for pullbacks if you get them at one spot 20978, and I would be looking to be a buyer there, not a seller. Not a seller. You see what's going on, right? If you were going to remain bearish, you should have done so here. You should have turned around right there. Break down, come in, settle low, come up, find supply, and then roll over. Instead, you have found demand down at these levels. Why would you find demand down at these levels? Yearly opening range. So as long as you're above one spot 20978 on the pound dollar, I'd be looking for bullish entries at daily supports. You don't have a daily support until all the way down there. So I would wait for a daily support to be formed. That's right. That means you got to wait on a bearish day to close. Once you get that bearish closing day, the next day, then you will look for bullish entries. That's how you truly sniper these entries. That's how you truly become a market operator or a day trader. You wait for the opportunity to come to you. Old supports can become support again. So Maybe today you close strong. Maybe tomorrow you have a pullback. Maybe tomorrow you close above one spot 21498. Then this is where I would look for buying opportunities on the pound. Bitcoin didn't do a whole lot. It did close back red on the hour. So here is your current New York session. You made a high of day and then you fell right back down to support. So I don't know if I'd be looking to be a buyer. The opportunity was here to up, and then you would have been taking profits as price moved up, like I did. And now you're closing or getting stopped out, right? Because price is under your entry. So you can keep watching it. A failure to close under it could still be construed as bullish. And you can take entries here if you want. I don't like that you made a fresh high of day and came right back to the support. But the range isn't that big of a range, right? It's more choppy than anything. Because look at the range yesterday. It was like straight down. You made fresh low after fresh low after fresh low. Like every 5-minute candle, you were making fresh lows. This is sideways choppy. Fresh daily high. Well, it's not even a fresh daily high. It's just an intra swing high. Because your open of the day is over here. Let me find the hourly. It just helps me find. Right there's your daily open. 22,963. Had the daily open. There's your high of day. Down, low of day. So you are currently trading at, you're probably rejecting from the 618 off today's range. Yeah. Yeah, that's what's going on here. So if you get above this, you could see a rip. So watch support. If support holds, the bears that are shorting this could be wrong. A close below this white line, you scratch the trade. You're done with it. That means you're going to have to wait another day. That means you're going to have to wait another day. Yeah. I don't know what this spikes from. At 7 o'clock in the morning, was there any news at 7 that would affect? No, there's no news this morning at 7 that would have affected Bitcoin like that. Not any news that was on the docket for the day, but there could have been some article somewhere that came out. And then again, this could just been random market violence. What's your best way of determining daily direction? By looking at the percent change on the day and seeing which direction it's going. I know it sounds too simple, but Bitcoin's bearish. It's down 1.20% on the day. The daily direction is bearish. So taking a long trade today means that you are trying to pick a daily bottom, or you're trying to find support. But we know this is support. It's objective support because you haven't been able to close an hourly candle under it yet. So although this can change and will change likely, and it could close bullish and up on the day, as of right now, it's bearish. That's another reason why sellers are re-engaging up here, because all they're doing is they're fibbing today's range. That's today's high. This is today's low. The problem with their thesis, and that's typically more than likely going to be retail, the problem with their thesis is they're trying to short it into support. This is daily support. So typically, this is what I like to see if I think there is going to be a turn in the marketplace. But I thought that yesterday, and I was wrong. By all accounts, Bitcoin should have hit 23K and moved to the upside, according to all the metrics that I use to distinguish trend or to identify order flow. This is what we call random market violence, because you get news pieces that come out throughout the day, and that affects investor sentiment, right? It affects it in a negative way. So you get a flash flood of selling comes through, and then the market reacts to that. Bunch of supply, so then it has to go in search of demand. And it might find demand here at daily support, because the 21 exponential moving average on the daily is also down here. I don't know exactly what price the 21 exponential is currently setting at on the daily. We'll call it there. I think that's close enough. We drop back down into the hourly. Let's get rid of the moving averages, because I only care about them on a daily basis. Yeah, I mean, that's basically where your sell side dried up. And you can see that in the chart. Like, this is your lowest candle body close on hourlies. So if you lose this support, then this support will be the next support to come into play. Right? That's typically how I view the markets. There is nothing in the world, or nobody in the world, that can tell you what's going to happen in a daily range. So the question you're asking, Johnny Two Pips, is an unanswerable question. It's simply because we can't see into the future, right? There is no way to determine which direction the daily range is going to expand. But with the techniques that I teach you and some of the tricks and tips that I give can help you in getting the daily direction right, but it's never going to be foolproof or 100%. Nobody can. You can go watch any YouTuber. And they're not going to answer that question outright. They're not going to say when 1 plus 2 equals 3, then that means your day will go up. And if 3 plus 4 equals 7, then that means for sure you're looking to sell. There's nothing like that that exists. Nothing. We have the data that we have currently, and that's the information that we have to use in order to make our directional bias. Because ultimately, that's all it is. Sometimes you're going to be right and sometimes you're going to be wrong. If you trade the way that I teach you how to trade, by operating in the high probable scenarios or the high probable areas, what we call the operating ranges, you have a higher likelihood of successfully pulling out profitable returns. That is it. But you're still going to be wrong. I was wrong yesterday. I had to stop yesterday. Unfortunately, that's just how these things go. But yeah, there is no definitive way that I can tell you the daily range other than to say, as of right now, Bitcoin is bearish because it's down 1.42%. So typically, you want to stay on the side of the trend. The New York session is the last session of the day. That means you've already had the Asian session and you've already had the London session. So, like, is the New York session going to change market direction or not? That's what you kind of have to ask yourself. And in most cases, the answer is probably going to be no. You can also see, like I said, these numbers here are coming down as well. So Bitcoin's not the only one that's coming off right now. You're getting a pullback on the S&P 500. You're coming off. Why are you getting a pullback from the S&P 500? Because you're into resistance. You are at the weekly resistance right now. So, is this a buying opportunity? It will be for some. It's not for us. We need to pull back, a deeper correction. I would like to see a pullback down to $4,000 or this close. Pull back down into there, then look for that expansion to continue. This looks like it's running out of steam to me. And when it's trending up, you can see it just how fast it goes. You've been trading here for what? 1, 2, 3, 4, 5. Today makes day 6. You've been trading in this box or this rectangle. The market stalled out, and it has a lot to do with the data that it got last week and this week. It's still trying to suss out that data. I would say you probably have profitable traders taking profits. You have new shorts getting set up. And it could simply just test the daily open and go back to the upside. You got a ton of resistance on the Nasdaq right here. This is why I said not to be a buyer on the Nasdaq. A ton of it. Monthly res, daily supply. You also have trend line resistance coming in there as well. Right? So, like, I wouldn't be trying. If you clone this line right here, I don't use trend lines that often just because they're subjective, but I mean, it doesn't mean they don't work. I just don't use, I try. Here, let me put it this way. I don't make trading decisions based off of them, but they can definitely help you identify a trend. You can see, like, if I put this in a channel, you're at the top of it. So, like, you don't typically want to be a buyer up there. So your buying gets exhausted at these areas because professionals understand that, hey man, this thing's in a lot of resistance, and let's close down some of these positions, take some profits, and wait for the next move lower to then be a buyer again. And you still do have sticky inflation concerns, right? That is the biggest risk for 2023 is sticky inflation. If sticky inflation happens, then the markets are likely to chop sideways at best. Best case scenario. Now, this is a one touch, only one touch here. So I don't know that this is going to be the channel that the market wants to follow or find. But you can clearly see that you're into resistance up there. Multiple resistances. You're even trading above weekly resistance right now. You're trading as an inside week. See, and today's Thursday. This is last week's range. Look how big it is in comparison to this week's range. That tells you something. It tells you that there's no momentum, there's no driving force. There's not a lot of demand coming in the market at these prices. So I would chill out on looking for buying opportunities right now. I don't think that you should be a short seller either. I just think that people need to be a little bit more patient, let price pull back into support, and let support hold. If it doesn't hold, then you wait on the next support. But as long as you're above this, you definitely want to be looking for support, not the other way around. It has been one of my biggest edges. I literally called it's helped me call massive market turns by using just that one little edge. By knowing that one piece of information, I literally could have taken 2 trades on Bitcoin last year and been done and killed everybody on them. That also works for the risk markets. The same exact edge. It works across all asset classes. You can back test it yourself. You don't want to take my word for it. You want to go back and look yourself. There's the first day of the year right there for 2022. What happened? Well, you broke down and you wanted to be a seller into resistance until you got back above that. Then you would have been looking for bullish entries. But as long as you're under that, you're a seller. And that ended up being the trend for the whole damn year. Now, there was some tricky areas. Obviously, you had some bull traps and some bear traps along the way, but your ultimate direction was easy. That's why we made it look so simple. That's why we will continue to make it look so simple. It's the intraday stuff that's tough, right? Intraday, intra-week, intra-month. That's the stuff that's hard to get. What's up, lads? Says Brooke. What's happening? But wait, what about the weekly depth cross? Yeah, we talked about that. I'm expecting down from 22,760 at least to 22,430 to make a double bottom or a DB. Yeah, a lot of people have a lot of different biases out there and a lot of different reasons why, right? Everybody has a specific way that they like to analyze charts. Sometimes they're right, sometimes they're wrong. Good stuff, Cassidy. Got my sunny Florida, got my jet pack on the boat. About to kick butt. That means he's got internet on his yacht. Loving life. That means he can be offshore and catching trades and fish at the same time. Woo woo. Love it. Pull one of them wahoos out or a red snapper and throw his ass right on the grill for lunch. You can't beat that. That's living. Crack open a cold beer or make a cocktail and have a great lunch after a great day of trading. That's the life. Doing it to it. Good stuff. Bitcoin's going down, down, down. About to retest the 21 moving average again. You're currently under daily support. Looks like it wants to break down finally. We're about to get an hourly close in 20 minutes. The chances of this support holding are a lot less likely. About to make a bearish engulf on the 2 hour. You already made a bearish engulf on the 4. 8 hour looks like bearish continuation. 12 hour bearish continuation. Daily bearish continuation. This is ugly. And I wouldn't typically like losing the 21. And like if we're not anywhere specific to the trend, like the overall trend, getting under the 21 and all that, getting back under the 50 on the daily will have me looking to take short entries on Bitcoin. But macro wise, I'm bullish, right? I can be long on Bitcoin by holding the inverse swap contract long and I can hold USDC long, but I leave the Tether account open so that way I can take longs or shorts intraday on the Bitcoin versus USDT account. That is how I am able to essentially trade long and short at the same time. But I would need to see a daily closure under the 21, and I need to make sure the next day that that doesn't end up being a trap also, because traps exist. And since we know they exist, we have to look out for them. I would not be looking to buy a fresh daily low. No. This is the price that I'm going to be watching if we get down here to see if we get any kind of bullish reaction, as you will have liquidated a pretty big swing low, right? That means you will have liquidated that weekly swing low. And that's all. There is no other higher time frame than that. So that weekly swing low right there, if we take that out and then get a bullish reaction, I might be interested in taking a long trade there. Maybe, depending on how much bearish momentum we get after taking that out. But notice how that weekly low is a little bit higher than that low. So the marketplace might just be looking for the weekly low. It might not be looking for that low. I don't think you're going to take out the weekly low without getting that low. I mean, you're talking like $5 of difference there. What's the difference? 22326 versus 22298. Yeah. $28 of difference. So we'll see what happens. I don't know if it even gets there. 22,524 will fire up a lot of buy algos. That's the 21 on the daily. But that will also change depending on where today's close is. But yeah, the market just took a turn for the worse. Is what it is. But I made my money back from not quite all the money back from yesterday, but most of it on today's trade. Even though I clearly was on the wrong side of the market. Because I take profits and move my stop to break even. So when that thing came down, it took me out of the position. It stopped me out. That's why I tell you to manage your risk, because we don't know what direction the market's going to go. And if you operate inside of the high probable areas and you have impeccable risk management, there's no way you can't get this right. Like, it's impossible to not be able to do it. 21.5 INC, but eventually we going to 100K anyways. Maybe. I mean, hopefully. I'd like to see $100,000 Bitcoin. Danny says, good morning, Heath. Today I took two trades. First was long Euro USD at 1.07632 with a stop at 1.7484. Take profit 1.0778. And short Bitcoin USD. Stop 22.739.81 with a take profit 22.607.81. So, I mean, we'll look at the Bitcoin trade. Real quick, we'll go over that one. $22,739. $81. With a stop. So that would be your entry. Let's make that green. $22,607. $81. $22,739. And then 22871. Is that 81 too? Yeah, all 81 cents. So you're looking for a 1-to-1. You did good. I mean, depending on what time you took the trade, right? If you took the short here, then naturally you got stopped out there. It just depends on what time. Well, you said today specifically, right there's the daily open. So that means you had to take it here. That's your stop. There's your take profit. 1-to-1 risk to reward. Good stuff. Danny took a 1-to-1 risk to reward long yesterday or the day before yesterday, and it did not work. But look what he did there. He used the hourly range for entry, looking to sell hourly resistance. This is hourly resistance. That's the highest close there. And then you had a bear or a bull trap there. His stop was there. Fantastic. Stop was not triggered. So all of this was setting in a loss, but then it came back and boom. Fantastic stuff. Now, let me ask you this, Danny. Would you have been able to do that before you subscribed to this channel? I already know the answer to that. Fantastic stuff. Euro USD. And folks, you don't need to look for 2-to-1 risk to rewards. I typically do, right? For me to even initiate a position, for me to even throw risk out there, I need to see at least 2-to-1 risk to reward. But that sometimes also will go against you as well, because it means you need a tighter stop loss, and I get stopped out, right? When those tight stops get triggered. So looking for 1-to-1s is a fantastic in options when you take an option approach of selling calls or selling puts, right? You're always skewed to the losing side. Like you're risking 4 to make 1 or 5 to make 1. In some cases, they're higher probable, though. They hit more frequently. Euro USD long at 107, 632. 107,484. And this is the golden stuff right here that people are missing. You know what I'm saying? Like, there was 78 people watching this video. Now there's 47 people. They don't want to sit through this. And this is actually the stuff that they're going to learn, because they will find out why Danny took this trade this way and why it worked. Take profit 10778. Hopefully your stop's at break even right now. So Danny got long at support right there with a stop loss to here. You can clearly see that he suffered no ramifications for that. Didn't even come close to his stop loss. Also got another chance for entry there. So entry here, here, or here. So for 3 hours, he had a chance on taking that entry. Take profit there. Why? That's resistance. See that? High probable setup. Entry, stop, take profit, upsy daisy, made money. Now what you do once this happens, once this candle runs up through that, you simply grab this and pull it up like that. And now, no matter what you have left on the table, because you leave a little piece open just in case you get continuation. We never know what's going to happen. See, like if this didn't roll over and it ended up keep going and going and going and going, and then for days and days and days, that is where Danny would have made a lot of money. Good effing stuff, my friend. Give yourself a pat on the back. You did it. That's twice. I mean, that's 2 trades right there that you took today that were profitable. You ate a loss the other day on Bitcoin. So I don't know if you're break even or not on Bitcoin, but you are learning. You are freaking learning, man. That is the strategy. That's the strategy. I'm going to make you a mod in a Discord if you're in there. If I can find you in the Discord, I'm going to make you a mod because you can help answer questions for the new people coming in. I bet you don't even look at a 5-minute chart anymore, do you, Danny? And guess what? You're better off for it. You are so much better off for it. You can watch this hour make its way down to support. You can see that was the entry on the hourly. You don't have to watch a 5-minute candle do that. You can watch this candle do that. We're watching this candle right now take you out of the trade, right? And look at this trade. So this candle breaks out above resistance, above your take profit, sets a new resistance. Here, look what this candle does. Next candle, you have a pullback for a solid hour. There's your hourly close. This candle opens. What does this candle do? It trades right back up to there, tags that. Then what does it do? It rotates all the way back down to there. There's the operating range. Those are your high probable entries. So at least one person has gotten it. To do that consistently, and you can because you did it consistently, you're done for the day. Do not give the money back. Do not expect it to go now from here back up there because of what time it is. It's 11 o'clock. It's 11 o'clock. So now the move has been made. It's happened already. Chances are this is going to just chop around sideways or whatever. Or this was the area that sellers stepped up and price is just going to continue trending lower. Who knows what's going to happen? We don't know what's going to happen in the future. Therefore, we can't predict what's going to happen in the future. All we do is we use the information that we already have on the chart. That's why we don't have crazy wild expectations of profit potential. We are simply using the market's ranges that the market has already provided for us. So doing the same thing anywhere else, once again, if you get that continuation, then once that trade ends up being a substantial amount of money or worth more than the amount of money that you originally made on the first trade, you can cut it in half just by simply setting a limit order and exiting the position or market out of it. Cut the position in half again and then forget about it. Leave it alone. Those are the better trades. Those are the ones I want people to focus on, not so much the liquidation break strategy, because the liquidation break strategies, they don't work as often as these trades that I just shown you that Danny took. 2 of them today, and both of them were successful. So yeah, and guess what? He went long around the top of the day. I don't necessarily like that, but at the same time, he had a reasonable expectation of where profit potential could be, which was there. And he was right. It went a little higher, but ultimately it came back and situated itself right back in that range. That's the dealing range. That's where the whatever's happening is happening. In a trending environment, and when you get lucky enough to nail one in a trend, for instance, getting short here, what time was that? The London session. So you had a resistance there. 2:00, 3:00, London session. Ultimately, there was your entry for the London session. This would have been your take profit for the London session. So for 1-to-1, your stop would have been up there. You would have never even you would have never even sat in a drawdown on this trade. As soon as you took entry, it started to move in your direction. There's where you took your profits. You scale your stop to break even. You leave a small piece on. By the time it gets down here, you're making more money than you made on the original entry. Because whatever you leave open is still levered up. So it's still going to generate money the further and further it gets away from your entry. Right? And you would still be in that position. This did not stop you out. Good stuff, Danny. I'm proud of you. Now take that info and repeat the process. It's still going to take time, obviously, to hone the edge, but you know enough of the edge now to where you can go in there and make consistent decisions about your trades. And once you have that consistency, man, you're going to see just like the data is going to start connecting the dots for you. You're going to be like, yeah, yep. I see now what's going on. Maybe I can tweak this. Maybe, and also make sure you're doing that, like I said, close to those times. London session early, New York session 7 to 10. If you're trading the London session an hour before up to an hour after, like 3.5 hours, 4 hours, give or take, you will get an opportunity in one of these markets. There's opportunities every single day. Good stuff. You're welcome, my friend. Old daily level on Euro USD at 107.88. Here, maybe. Yeah, old daily support. Or there. And I'm also using a different exchange than him, maybe. But yeah, good stuff, Danny, man. No indicators, nothing. Just straight up price. Price and price alone. Danny's out here killing it now. Woo woo. Loving it. Thanks for your time and thoughts. Gotta go later, dude. Later. Yeah, we're gonna wrap it up. We've been going long enough. People are dropping off like crazy. Old daily level. Yeah, read that. Thanks, Heath, for the lessons. Analyzing the Danny's trades. Yeah. I mean, that's what I'm here to do. I'm trying to help you guys understand what you're looking for. You got to know what you're looking for before you can even find it, right? I got to know what I'm looking for in order to even find it. That's what we're looking for right there. Those ranges. Get off the 5 minute, stick to the hourly. Those ranges will reveal themselves to you. You'll see them clear as day. The trade I took on Bitcoin, and then we'll wrap it up this morning. Mine was a little tighter. Like I said, I try to operate on a slightly bigger or smaller risk than what Danny's operating on, but it doesn't matter if you can jerk 1-to-1 consistently out of the marketplace 2 to 3 times per week. You can change your life. All you need to be able to do is consistently repeat the process. That's it. There's support. There's resistance. I noticed that this one closed above 8:30 on the news here. On this push lower, I took my entry. Instantly, price trades away from my entry and goes straight up to my take profit. I close the position down. I move my stop to break even. Pushes on up, on up, on up. At this point, if you want, you can even take more profits. It's up to you. I don't care. This from here to here is where you're operating. And then boom, this comes down, stops me out. I was long. So even though, because clearly it's a down day, the day is down. Even as of right now, 3 hours later, we know that me getting long there was the wrong decision. I still made money today based on those rules. Even though I was on the wrong side of the trade, I still made money. Boom, down, and I'm done for the day. I'm not going to be chasing price all over the place. Take an entry there, lose money here. Take an entry there, lose money there. Take an entry here, lose money there. No. Wait for it. If it's not there, you don't do anything, right? If there is no clear, obvious range, then there's no clear, obvious trade. Thank you guys for your time. As always, make sure you guys trade safe. Make sure you guys trade smart. And as always, happy trading, everybody.